and welcome to Big Deal. Now, action is clearly picking up on the stressed asset space and it is gaining momentum. Now, important meetings of the Joint Lenders Forum have been conducted this week and some of the biggest accounts are going to make their way to NCLT under insolvency and bankruptcy. Now, will this really mean a resolution through restructuring or a sale via liquidation? That's a big question that everybody is asking. Now, we spoke to JSW Steel, which is, remember, seen as a big consolidator in the steel sector, and the company is not very convinced that there will be many deals.
So even assuming that it is referred to IBC, I expect the pre-packed restructuring which is being worked out by the banks will get approved. I am not sure that these companies would be available for either for bidding by others. So that aspect I think we have to watch. So I don't expect a big consolidation even assuming that these will be referred to IBC. The feedback which we are getting from the banking system, it is all pre-packed restructuring which would go through this system.
So we'll keep you updated on what's really transpiring on the M&A space when it comes to stressed assets. But let's take it straight across to the guests in this episode of Big Deal and homegrown mid-market private equity fund, which is multiples with commitment of $1 billion of investments in India. And I have the managing directors of multiples here with us, Sudhir Variabar as well as Nitya Ishwaran. Both of them are here with us in the studios. Thanks so much for joining us. Now, my first question, of course, you both have been ex-bankers and now you are on investment side. How do you see the debt situation panning out, and will multiples also play a big role as far as investments is concerned? Sudhir.
So we have always believed that we should have a fairly diverse strategy when you look at the Indian opportunity, and we have in some cases been opportunistic as well. And the stressed asset space is clearly something which is an opportunity given the high leverage that exists in the banking system. We have done our bit in the sector. We have done a transaction. Last year we kind of started a team to specifically look at the stressed asset space. The way we look at it is it's an opportunity for any high-risk investor like a private equity firm. It's one area to look at. We, apart from the various sectors from a vertical perspective that we look at, like, say, pharma or financial services, this forms a horizontal strategy that we look at. And we have set up a team consisting of very experienced professionals from the who have worked for years in the stressed asset space and started looking at it. So, yeah, we continue to watch that space, and we believe that at some point of time it can very easily consume about 15 to 20% of our private equity fund.
15 to 20%, that's a big amount. So, Nitya, what do you think? Most of them would be resolved through resolutions in terms of restructuring, or will there be many M&A sales, liquidation as well of many companies where you can take advantage of the situation?
Yeah, sitting today, resolutions do look tough. We have to see how it really plays out. But I think the part that we could probably look at sooner rather than later is probably an M&A situation or entering with a slug of capital for an over-leveraged company. So really catching it before it becomes distressed as well. So you could call it stressed and not distressed yet. So those are the opportunities that could come sooner. On the resolution, we have to really see how the various regulatory and situation really plays out, and whether banks are able to get together, sit together and resolve a situation is something that we really have to see. As Sudhir said, that the case that we did earlier was relatively simpler, the one which we did in our Fund 1, where we had to sit and negotiate with one bank. And that's something which is doable, and probably more such situations we could look at.
So is it challenging to talk to so many bankers for any such stressed asset deal? And do you think that the bid process is amply clear for an investor to jump into it?
Not at this stage. And it is definitely a challenge. Each bank has its own, provisioning policy. They have their own internal challenges to conquer. So at this stage, I would say it is challenging. So if it's a smaller consortium, probably works better.
So, Sudhir, what are we focusing on right now? So, mid-market, we've seen that you are looking very interested in more majority and, near buyout situations at this point.
Yeah, so as I mentioned, we kind of, for us, it is the situation that really gives us to form the right solution. And we look at private equity more as a solution provider. So we have investments from minority to majority. We have done situations in platform investing where we have incubated companies in certain sectors. We have looked at stressed asset, as we spoke about. And my sense is we see opportunities in all of these play out. It's not that there is one particular strategy which is at this point looking more likely. We do have a preference for, and control for us is more from an exit perspective. Control just gives you more flexibility in terms of exit. It kind of allows you to look at strategic exits, and that's unlike a minority growth where you sometimes get locked into just looking at an IPO as an exit opportunity. Though even that is changing in the sense that today we do get into situations where while we may be a minority investor, but the entrepreneur stroke promoter who has the majority is clear that he wants to do a strategic exit as well. So you are building the company to the next stage of growth and eventually will do a control exit in a 4 to 5 year period. So to that extent, it gives you the same flexibility as if you were in control from a exit perspective. The other aspect of control in terms of whether control or minority, you still need to work with managements to grow the company. And we as a firm believe that influence is dependent on your conduct and the way you approach the business with the spirit of partnership. Whether you have a 70% stake in a company or you have a 20% stake in the company, you will be able to influence or you will not be able to influence, in the sense that you could be in a situation where you're a 70% owner, but there is just no relationship between with the management team.
No, but I was more talking about the strategy at this point as well. That's about the exit bit. But Nitya, in terms of strategy, which are the kinds of companies that you're more focused on for a good return going forward?
So like Sudhir explained, from a sector perspective, we are playing the India consumption story, whether that is across consumer, discretionary consumer spend itself, or financial services, or pharma and healthcare. So that continues to be the mainstay.
Right.
In addition to that, technology-led firms and pharma, which will play to the India manufacturing capability, but an international market. Will also be of interest to us. But beyond this, and you would probably hear many private equity funds follow this because it is an interesting place where there is a lot of growth and a lot of transactions happen as well. But beyond this, we look at the situation, and I think that is quite important. So we definitely look for situations which are shareholder realignment. And we believe some of these deal constructs bring with them a different lens with which to view a particular opportunity. So if we are able to take out an existing shareholder who probably started up the company along with a set of other shareholders and become a thought partner and a co-entrepreneur, in a manner of speaking, to the existing entrepreneurial team, that's something we particularly look out for. Similarly, where there could be corporate action. So we do believe India will see a lot more of demergers, carve-outs, and even larger promoters selling out. So we are building our own skills and knowledge base of the team in all of these. So we do have the sectors as well as the strategies to play. And we keep using this metrics to
What makes you
look at
believe
these.
that some of the big promoters are going to also sell out?
We see a lot of that, if we had this conversation probably, 10 years back or 5 years back, it would have been a difficult thing to say. But we have seen a lot more. We have seen Piramals definitely sell out and become a co-investor and become an investor himself and take stakes in other companies. And we have several such examples. We have seen the Crompton Greaves demerger, which private equity has bought. So increasingly, we see a lot more of these conversations. I would ourselves say in our journey from Fund 1 to Fund 2, say 5 years back to now, we have a lot more conversations on this front. I think India is maturing as a market.
So, Sudhir, what is the ticket size that you are essentially looking at, and is that also expanding with time as more opportunities present themselves?
Clearly, the ticket size that we look at as a $700 million fund is more in the range of $50 to $100 million. But today there is significant interest from many of our large investors to also come into the country. And clearly some of them seem to have taken the big view on India as an economy where they want to increase stake. And it gives opportunity for, and they need local partners to kind of manage the investment. So it gives opportunity for domestic managers like us to up the ticket size, play a larger role. And many of the companies itself, so the ability to absorb a larger slug of capital has increased. And particularly in certain sectors like, say, financial services. And now there is the insurance sector has matured and you see transactions happening there. The ability to put a large check to work is pretty significant. And we see players like us, you would continue to see them growing in terms of ticket size.
All right, hold your thoughts there, and we will come back and discuss more about the strategy of multiples and where you are looking to invest right after this short break. Stay tuned to Big Deal.